privileged to have Chris with us, given he's heading to North America in only a few days to oversee the next phase of Winsome's extensive exploration program in Canada. Chris, it's been an interesting time in capital markets at the start of the new year. There's been lithium and nickel stock which have been hit the hardest. I'd like to use this opportunity to hear what your opinion is of the situation, and then more importantly, what you think the outlook for the remainder of 2024 looks like for both Winsome but also him as a global market.
Thanks, Luke. It is very unfortunate the fall in share price we and many of virtually all of our peers have experienced over the last 6 to 9 months. But unfortunately, it's just part of any commodity cycle, particularly that of lithium. We saw a boom and then somewhat of a bust back in 2018 and 19. Leading into 2020 when the recovery came about. And since then, of course, it's been a great boom and most lithium stocks have done really well. Now, having lived through the previous boom and bust, which I have and most of our board have, we expected this to come. I mean, everyone should expect it, but not many people prepare for it. And I think that's what we did this time by stocking up on the cash when we could to make sure that we've insulated ourselves against the vagaries of the market like now. I mean, it's a pretty big call to call the bottom, but it feels at the moment very much like we're at or very near the bottom, sitting here in late January 2024. And I think from here, after Chinese New Year, the market's going to start to improve. And I think that'll take many months to flow through the full gamut of lithium projects out there. But I think projects like us who are currently working, we're increasing our resource and we're well cashed up and we're on the cusp of entering the project phase, we're the ones who feel that appreciation first. So it feels to me like when the turn comes in Q2, sort of mid-year, we will then start to experience that in terms of our share price increase for the remainder or the second half of the year.
Chris, you make a really interesting point around the natural life cycle of lithium as a commodity, and this current situation is about it really maturing as a commodity. So what's your opinion around the supply and demand as the world continues on with its global energy transition?
I think what's led to the current situation is definitely a perception of oversupply in the short term, and no doubt certain parts of the battery material supply chain or certain parts of the lithium supply chain have experienced oversupply. But I think that's going to change very rapidly. And one of the key differences, if we again hark back to the downturn in 2018-19, was that those who were producing at the time had a really hard time even just selling their product. There wasn't a market big enough to take that product when there was perceived oversupply. The difference now is even though prices have fallen off considerably for spodumene concentration, there's still a huge market for it. The demand has grown 6 or 7 times since that last downturn. So the market's still there, and as you point out, that's part of a maturing commodity market. I think going forward, as we come out of this, and what this is showing is that the prices we got to of maybe $8,000 a tonne for some of those spot prices at the recent high, they're not sustainable. And however, nor are $900 a tonne prices that sort of Woodmac and talked about recently for the next 5 years. I think anyone who knows the market knows that that's ridiculous. The cost of most producers in the market now is somewhere near that. So it's got to be higher than that in order to bring new supply on. When that new supply comes on, the first projects are going to be looked at are those with multi-decade assets, high quality ore bodies, i.e. near the surface and of good grade, and very importantly, have high ESG credentials. We have all of those at our Adina project, but particularly the ESG is important to us. The fact that we can use hydropower, which lowers significantly the carbon footprint, that's going to make our product so much more attractive than many others in the market.
I think the ESG features that your projects in Canada do have are a standout for you on that in the lithium landscape. And I think Winsome's always been renowned for being one of the first or leaders in the whole exploration pack, given that you broke ground there earlier than most. So what are the near-term catalysts for Winsome as it continues on its extensive exploration phase?
We've actually got a lot of near-term catalysts coming up, and that's different to many juniors, most of whom are hunkering down now because they don't know how long it's going to be before they can raise money, before their share price returns to where it was. It's going to be 6 months, it's going to be 12 months. For us, that doesn't matter because we've got the money. So we've got a lot of catalysts coming in the near term. We haven't slowed down at all. We've got 5 drill rigs on site. We're waiting on around 15,000 metres of assays to come out of the labs so that we can upgrade our mineral resource over the next 3 to 6 months. We've got study work ongoing, of which we'll publish our first studies in the second half of this calendar year. And within that study work, there's met test work, mining studies, environmental studies, all ongoing, which we'll be publishing as we go. So I think there's a lot of news coming from us over the next 3 to 6 months, again, so that we can emerge once this downturn is over. We'll emerge as one of the strongest lithium players out there, or developers, with one of the largest resources in North America.